Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within the corporate world. And today we've got a filing that has got a little bit of everything, from surprise departures to fresh funding. Let's dive in. So this is a Form 8. Think of it as an urgent bulletin from a company to the public, usually about something big and important that just happened. And this one, filed by Haymaker Acquisition Corp. 4, is definitely packing some news. First up, the company announced they secured an additional $23 million in funding. This is part of what they call a PIPE investment, which basically means they sold shares to a select group of investors. This is money coming in, which is usually a good sign, especially when you are trying to get a business combination off the ground, which is what Haymaker Acquisition Corp. 4 seems to be doing. They're looking to combine with another company, Suncrete, and this funding helps make that happen. But here is where things get a bit dramatic. Right on the heels of that funding news, they announced that Stephen J. Heyer, who is the president and a board member since March 2023, has been removed. Now, the report is quick to say this wasn't due to any disagreements about how the company is run. But still, a leadership change, especially at the top, right when you are trying to nail down a huge deal, is always something to watch. It makes you wonder what is really going on behind the scenes. Now, like most of these filings, a big chunk is dedicated to what they call forward-looking statements. This is basically a legal disclaimer where the company tells you they're making educated guesses about the future, but things might not turn out that way. They list a whole bunch of risks, like the deal not happening or problems after the deal closes. It's their way of saying, hey, we're hopeful, but don't sue us if our predictions are wrong. Some of the biggest worries they highlight are the risk that this whole business combination, along with that funding we talked about, might not actually happen, or might take way longer than planned. They also mentioned that if too many current shareholders decide to cash out their shares, it could mess with the trading of the company's stock after the deal. It's a pretty standard but important list of potential problems that could derail their plans. And as for what exhibits they've included, Therese Exhibit 10.1, which is the form of that PIPE subscription agreement we mentioned. This is the document that lays out the terms for that $23 million investment. It's essentially the contract that seals the deal for that funding. Finally, the report is signed off by Christopher Bradley, who appears to be the Chief Executive Officer and Chief Financial Officer. This signature is what makes the filing official. So, what is the story here? Haymaker is pushing forward with a big acquisition, and they've successfully brought in more cash to help make it happen. That is the positive. However, the abrupt departure of their president and a board member so close to these major events introduces a layer of uncertainty. It raises questions about internal dynamics and leadership stability at a critical juncture. The company is being upfront about the risks involved, which is good practice. But these are significant hurdles. Looking at it from a strategic standpoint, securing that additional funding is a clear positive step towards closing the business combination. It shows confidence from investors who are willing to put more money into the deal. The leadership change, though, is a red flag, while the company states it is not due to disagreements. Such a departure at this stage can signal underlying issues or a strategic shift that isn't fully disclosed. The risks they highlight are typical for these types of transactions, but they are very real. The success of this business combination hinges on navigating these risks, especially shareholder approval and seamless integration. In conclusion, Haymaker Acquisition Corp. 4 is in a high-stakes game. They're moving aggressively to complete a business combination, fueled by new investment, but the sudden exit of a key executive injects a note of caution. Investors will want to see stability and a clear path forward from here. Alright, that is our speedy breakdown of this 8K filing. What is your take on these developments? Do you think the leadership change is a concern or just a normal part of corporate maneuvering? Let us know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up and remember to subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description. Thanks for watching, and we'll see you next time.